Now guys, we are going to discuss the agenda of this S&P 500 weekly technical analysis for the week of March 13th, 2023. That is from March 13th Monday to March 17th Friday. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. Chart means the hawk eye view, the big picture. We are going to see that what is going to happen in the S&P 500 on the weekly chart. This week, you will be surprised to know that the S&P 500 has formed an engulfing candle on the weekly chart. It's a very heavy bearish engulfing candle, and it is very, very significant, right? So as you know that in my S&P 500 technical analysis, other than the technical indicators, I also emphasize on the candle, the pattern, or this is the formation, okay, and this is the pattern and the closing of the candles, because that is very, very important, right? So we will talk about the engulfing, okay, that how the engulfing is going to drive a bearish market, okay, or this is a bearish movement, and what kind of the next weekly candle we are going to see in the picture, okay, etc, etc. So weekly chart means the hawk eye view, the big picture. Weekly chart will tell you what is expected to happen in next 1, 2 or 3 months or 6 months, okay. This is a broad picture. Then comes the second point of the agenda of this S&P 500 weekly technical analysis, and this the second point is the S&P 500 support and resistance levels. So in my previous S&P 500 weekly technical analysis, I mentioned this thing, that in the coming week, means whatever has happened in the recent week, whatever is going to happen, it will be in between the zone of 4035 and the zone of 3840 to 3790, okay. Because we are anticipating a very heavy bearish movement, thus we can expect okay, a fall up to the zone of 3840. But no matter what, S&P 500 will not be able to breach the zone of 3840. Okay, and exactly okay, it did. Secondly, I mentioned that anything beyond the zone of 4035 is 100% purely manipulated, and even in the best to best case, manipulated scenario, okay, S&P 500 is not going to breach 4100. It will remain below 4100. This means that if you see that it is moving up beyond 4035 zone, then go bearish. So for this the coming week, okay, I will give you these support and resistance levels for the S&P 500. Okay, this is the similar one. Then comes the third point of the agenda of this S&P 500 weekly technical analysis. And the third point of the agenda is the Federal Reserve Chairman's testimony to the Senate and to the House and its impact on the entire stock market. Not just on the US stock market, but also on the global stock market. Then I will discuss the fourth point of the agenda of this S&P 500 weekly technical analysis. And the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. Now see, the first point of the agenda, okay, it was a weekly chart, means the hawk eye view. But the daily chart means we will see that what is going to happen on this the day-to-day basis, okay, technically, what the technicals are saying, okay, whether the technicals are saturated or not. If the technicals are saturated, then how it is going to impact the movement of the S&P 500. So we will look into this the daily candle. So this the technical analysis on the daily chart means we are going to look into the near future, means like 1 week, 2 weeks, 3 weeks, okay. Guys, then comes the fifth point of the agenda of this S&P 500 weekly technical analysis. And the fifth point of the agenda is the S&P 500 probable movement from March 13th, 2023, that is Monday, to March 17th, 2023, which is Friday. For example, in my previous S&P 500 weekly technical analysis, I mentioned this thing that on Monday there will be a doji candle or a bearish hammer. Okay, this kind of candle, and exactly this kind of candle was there. Okay. Secondly, I mentioned that because it is going to come down and because it has found good support at the Ichimoku and also at the zone of 3937. This means that second time it is not obliged, or it is not under any obligation to hold at this the Ichimoku cloud or this the zone of 3937. And then you can clearly see that when it came down, it was able to breach the Ichimoku cloud very easily, and then it came down. Then on this the Friday again it came down, because the first time obligation, okay, it was over as soon as there came a reversal. So this is what I mentioned on to my YouTube community members, okay, earlier on that Thursday, that we are going to see a reversal. On Thursday there was a reversal, okay. Only this the Friday it went against our expectation. It was manipulated. Then on Monday, yes, Monday again we knew that it is manipulated. It will come down. Then back to back, okay. These are the profits, right? So the probable movement, I will tell you that what is going to happen on Monday, that is March 13th, then on Tuesday, Wednesday, Thursday, and Friday. What kind of movements we are expecting, and other than that, okay, some other data, okay, that is going to publish, okay, this is the next week, and one of the most important data is the CPI data. So now, because the CPI data is the crucial factor here, and that is going to impact the entire stock market. And this is going to happen on Tuesday. That will be Tuesday will be March 14th. On March 14th at 8:30 a.m. Eastern Time, US, the CPI data will be published. Okay, so this is going to make a very huge impact on the entire stock market, right? Now, guys, there is one more thing, that this S&P 500 weekly technical analysis, it will be a bit lengthy. That is why I have made these the chapters in this the S&P 500 weekly technical analysis, so that whichever chapter you want to watch, you can watch, whichever chapter you want to skip, you can skip, and whichever chapter you want to rewatch, you can rewatch. So guys, before I discuss the S&P 500 technical analysis on the weekly chart, I want to clear this thing, that this S&P 500 weekly technical analysis is not a financial advice of any kind, in any form or in any manner. This S&P 500 weekly technical analysis is not about any trade setups. Whether you are making 2000% profits or 1000% profit within a day, or you are seeing 10-20% losses within a day, these profit and losses are all yours, because I do not know how you are going to interpret my S&P 500 weekly technical analysis. Although I try my level best to clear each and everything to you, so that you understand exactly what I am trying to say, but still I do not know how exactly you are going to interpret my S&P 500 weekly technical analysis. So guys, once again, if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. And if you are looking for these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, that has an accuracy of more than 90%, then you can join my YouTube community. The link is in the description of the video and also in the comment section. Now guys, let's talk about the first point of the agenda of this S&P 500 weekly technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Let's move on to the weekly chart. Now guys, we are here, and this is the weekly chart of the S&P 500. Okay, and also this is the first point of the agenda of this S&P 500 weekly technical analysis. Now, weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. So guys, let's first analyze the candle itself. So as I mentioned earlier, it's a heavy bearish candle, very heavy, extremely heavy bearish candle. What kind of heavy bearish candle? This kind of heavy bearish candle, this kind of heavy bearish candle. It simply indicates that there is very heavy bearishness in the entire stock market, in the S&P 500 and in the Dow Jones and in the Nasdaq and in all other indices and their respective ETFs like SPY or the QQQ or the DIA, etc. Right? So how this the engulfing impacts? So what is the impact of the engulfing? Okay. So if you notice that this single candle, this single heavy bearish candle has engulfed these two weekly candles, these two candles. Okay, not one but two. This means that, okay, and this was something similar. Okay, we have seen here that one bearish candle has completely engulfed the these two candles, and then what we have seen the next week, again a heavy bearish candle. So I'm not saying that an exact candle will be formed here, but what I'm saying that because of the heavy bearishness, you will see the red color. What? The red color. That's it. Okay. Red color as in what? Red color means you can see that by the next Friday will be 17th of March 2023. That will be the next Friday. You will see that the weekly candle that is going to form here, it will be most likely or highly likely it will be of the red color. it will be of the red color. So this was in my final update on March 9th, that I clearly mentioned that even though we have witnessed heavy selling in the entire stock market on Thursday, so this was the result of the heavy selling, very heavy selling on Thursday, right? So I mentioned that even though we have witnessed heavy selling in the entire stock market on Thursday, but this is not enough. This is not enough. The stock market still has room, or more than enough room, for more bearish movement. And tomorrow, and I guess tomorrow, if it comes down heavily, then it can come down to 3884 comfortably, very comfortably. And also it can touch down to 3840 zone, but that will be intraday only, right? And exactly the same as happened on Friday. So this is how I help my YouTube community members, by giving them these the updates. So now we can clearly see that there we have the 200 week moving average. This is at 3734 or 3735, the 200 week moving average. And the closing of the S&P 500 was at 3861. So this means that still there is room, enough room, or more than enough room for the S&P 500 to come down to 3735. Okay, means you cannot say that because we have seen back to back on Thursday heavy selling, Friday heavy selling, so there will not be any heavy selling. Means there will not be any heavy selling on Monday or Tuesday. No, this is not true. Back to back we can see heavy sellings for 4, 5, 6 or 7 days. Okay, so stock market doesn't. So see, you need to understand that the stock market, it doesn't work on the assumptions. Okay, it works on the technicals and the data analysis. If the data analysis or if the technical say that there is room, or there is more than enough room, then back to back it can give you 6, 7 or 8 bullish or these the bearish candles, right? So as of now we have this the 200 week EMA. Okay, I'm not saying that it will hit and then immediately it will reverse. No, it can even breach. But what we can clearly see is that yes, now the 3735 is in the picture clearly. Okay, it is in the picture, and also it is achievable. Okay, and also hitting 3735 is not going to saturate any technicals. Now let's talk about the technical, that what is happening, okay, to this technical. Okay, first comes the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Bands. Because the S&P 500 has closed on the weekly chart in between the lower band and the median of the Bollinger Band, this means that the S&P 500 is clearly bearish through the Bollinger Bands on the weekly chart, right? Then comes the EMA, moving averages. If you notice that, looks like that if there comes one more bearish candle, then the next week itself there will be a crossover, a bearish crossover in the moving averages, and that will be perfect, because once that happens, then the S&P 500 on the weekly chart will be absolute 100% bearish. Okay, as of now the S&P 500, it has closed below these the moving averages. Okay, secondly, there is this a fan out in the moving averages, that is bullish. Okay, so what we are going to say that as of now the EMAs or the moving averages are supporting a neutral trend. Okay, or are simply neutral. Okay, neutral, that's it. Moving average is neutral. Now comes the Ichimoku cloud. Because the S&P 500 has failed and has closed below this the Ichimoku cloud, this means that the S&P 500 is bearish through the Ichimoku cloud, right? Now let's see what is happening through these other technicals. Okay, well, so we are at the junction, okay, in case of the moving averages and also in case of the MACD. And it will be happening after November 2022, after 4 months, no, about 5 months, 4 or 5 months. Okay. So next week, if there comes a small candle, any small candle or a red candle, then also the MACD will cross over on the weekly chart, 100% confirmed. The only case it cannot give this the crossover is if there comes a reversal, a good bullish reversal. Okay, but however, seeing the condition, this is the situation, we are expecting a red candle. This means that we can expect a crossover in the MACD, bearish crossover. Now stochastic RSI, it is already bearish. Okay, yes, so through MACD as of now, we will say that directionally through MACD, S&P 500 is bullish. But through the stochastic RSI on the weekly chart, S&P 500 is clearly bearish. So then the divergence is normal, and then saturation is fine, volatility and momentum, okay, everything is okay. Okay, fine. Now, Now guys, there is this one more important thing, that once there comes a bearish crossover in the MACD, right? Bearish crossover in the MACD, then the MACD and the stochastic RSI will both of these will be aligned bearish. Both of these will be aligned bearish. Okay. And as the concept says, if you have subscribed to my channel for last many weeks, months, okay, or year, okay, then I have mentioned this thing again and again, that whenever the MACD and the stochastic RSI are aligned in the same direction, then that will be the direction of the particular stock or the index or the entire stock market. Okay. So now, because this is a significant change that is happening on the weekly chart of the S&P 500. So next week, if there comes, okay, most likely there will be a crossover. Once that happens, then the entire stock market, it will go bearish, because in that case it will be under technical obligation to go bearish. So guys, now if we see, S&P 500 is bearish through the Bollinger Bands. S&P 500 is bearish through the Ichimoku cloud. S&P 500 is bearish through the stochastic RSI. S&P 500 is bullish through the MACD or marginally bullish. S&P 500 is neutral through the moving average, which is EMAs. This clearly indicates that the S&P 500 on the weekly chart is 80% plus bearish. Okay, and also it is in the long-term bearish trend. Long-term bearish trend that has started, that was seen from May 2022. Okay, almost 1 year. So it is still in the long-term bearish trend. So guys, once again, if you have not subscribed to my YouTube channel, then please subscribe and click on the bell notification icon. And other than that, if you are looking for the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my YouTube community through the YouTube membership. The link is in the description of the video and also in the comment section. Now guys, let's move on to the second point of the agenda of this S&P 500 weekly technical analysis. And the second point of the agenda is the S&P 500 support and resistance level. Now let's see that what are the limits, what are the trading limits for the S&P 500 in the next week. What will be the limit on the bullish side? What will be the limit on the bearish side, etc. Now guys, we are going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. That is for the week of March 13th, 2023. So the second point of the agenda is the support and resistance levels. Okay, support and resistance levels. So as I mentioned earlier, that last week we knew that, okay, it will be 4035 zone and then the 3840 zone. Okay. This week, however, okay, there is a little change, and the change is, okay, in the resistance side. Okay. So what has happened is that because the S&P 500 has come down significantly to the 3861, okay, 40, 50, 61 levels. Okay. And also there are the two consecutive closings below the Ichimoku cloud. Okay, so technically, okay, we are going to discuss this thing, but technically it is absolute bearish. S&P 500, Dow Jones, and all other indices are absolute 100% bearish. Okay, so because we have seen the two consecutive candles, heavy red candles below the Ichimoku cloud, this means that now earlier the same Ichimoku cloud that was acting as a strong support for the S&P 500, it is going to act as a strong resistance for the S&P 500. What it means? This means that on Tuesday, CPI data will be published. CPI data. Okay. CPI means the inflation. Okay. On Wednesday, PPI data will be published. Okay. PPI data will further tell us that whether we are expecting any increase in the prices or not. Okay. PPI data, as I mentioned earlier in detail, that it is like what the third parties are paying on your behalf. Okay. So if the third parties are paying more on your behalf, this means that they will charge more from you. If they are charging more from you, this means that the prices are going to move up. When the prices are going to move up, this means the inflation will move up. Okay. Anyways, we are talking about the support and resistance levels. So now, okay, Tuesday, Wednesday, this means that even in a favorable case, even in a favorable scenario, okay, so we can say that whenever it gives a bullish reversal in a favorable scenario, this means that anything in the bullish side now will be restricted to at most 3991. 3991. See, I'm not saying that the S&P 500 will be able to retrace back to 3991. No. As of now, the technicals are saying that any retrace that comes in the S&P 500, it should be limited to the 3937 zone. And if you notice that this was my first update yesterday to my community members on Friday. So I told them that looking into the first hourly candle, it is clear that the stock market, means the S&P 500, understands the value of the data and the expected 50 BPS rate hike, which is why there was a flat open in the bear side and not the expected bull side. Okay. Now, because of this, the 1 hourly candle, the S&P 500 came down and found good support at around 3884. And since then, it's trading bearish. This means that now any reversal, if comes, will be limited to the zone of 3937. That's it. However, in the bearish side, we can expect that it will be handled by the 3884, or it can find some good support at 3884. But if the selling accelerates, then today itself 3840 zone will come into the picture. We are not expecting anything below the zone of 3840, right? Means that yesterday on Friday, we knew that if there comes any reversal, and if you have noticed that there came a reversal, there was a reversal in the second hour. Okay, and it moved up to what? It moved up to 3934. And I have mentioned this to my YouTube community members that there is nothing beyond the zone of 3937. Okay, we are done. This means that even if there comes any reversal, this reversal will be limited to the zone of 3937, because earlier it has acted as a good support. Now the same is going to act as a good resistance, right? However, if because of the CPI or because of the PPI, okay, if there comes any bullish reversal, and if that bullish reversal is heavy, and if that breaches the 3937 zone, then at most 3991 and done. Because technically now any movement beyond 3991 or 3980, it is technically it is not supported. Just like, okay, here this was the 4035 zone. Okay, anything beyond 4035 heavily unstable, came down and down. Okay, similarly here, this means that in the coming week 3991 at most, means 3991 is exceptional. Okay, only if the data supports or some news that says that the Feds are still planning to go with the 25 BPS, and if that news is confirmed. Okay, so in an exceptional event, it can move to 3991. Okay, so below 3991, then we have the 3960. Okay, it is good, but the very good resistance is at 3937 zone, 3937 zone. Okay, then we have 3900, 3984. 3984 is going to act as an immediate resistance. Okay, an immediate resistance. Then we have so then we have this the question. Okay, now comes this the support. So we have talked about the resistances. Now comes the support. Support, as I mentioned in my previous S&P 500 weekly technical analysis 2-3, okay, for 4 weeks, that whenever the S&P 500 comes down, then there is a very strong support that ranges from 3840 to 3790. Okay, so see, these levels are our calculated support as well as resistance levels. Depends on the movement of the S&P 500, but these are our calculated support levels. Okay, and if you notice that historically whenever it came down, okay, it finds support, very good support. Okay, reversal means it has spent like 2 or 3 days. Okay, again and again, whenever it came down, it has spent 2, 3, 4 days. Okay, then there came, okay, this is the consolidation. What it means? This means that this is going to act as a very heavy support for the S&P 500. S&P 500 has to spend 1 or 2 days, okay, around or in this the zone. The breach of this zone, okay, heavy breach of this zone, okay, it is not permitted until and unless S&P 500 spends some good time, maybe like at least 1 day, minimum 1 day. Okay, it has to spend here, or historically it says that 2 to 3 days. Okay, it should be there. Then comes beyond 3790, then we have 3760. Okay, again a very good support. Then we have 3735, historically good support. 3710 is a very heavy support. 3710, okay, a very heavy support. And then we have after 3710 we have 3680. Okay, 3680. Then we have 3635. Okay, 3635 earlier also it has acted as a very strong support to the S&P 500. Okay, 3630. Then we have 3600, then 3580, and then 3560. Okay, now you might be having this the question that why I'm talking about the 3500. Okay, something like 3560, 3580. The reason is that on Tuesday there will be the CPI data. Okay, and then there will be this the PPI data. Okay, because the Fed chairman has recently confirmed that Feds are going aggressive, Feds are hawkish and expect more than expected rate hikes. Okay, this means that now the stock market, now these the indices, Dow Jones and the S&P 500 must take this thing into account. Okay, and how they are going to take this into account, this thing, okay, like this thing. So the index, the S&P 500 has to give some kind of very heavy movement, very heavy bearish movement. Okay, what we have seen as of now, only two bearish candles, 4%. That is nothing. 4% is nothing. Okay, if it comes down by 8 to 10%, 12%, yes, that is what we can say. Okay, yes, that is significant. This means that still if it comes down and if we calculate from the previous closing level, then yes, it comes out to be 7 to 8%. That is perfectly fine. S&P 500 has the potential. Historically, it has given this much, like 7 to 8%, 7 to 10% within a week. Okay, that is the reason why I'm discussing the 3560, 3580. So guys, now I have discussed, okay, these the support and resistance levels. I have one more very important information to share with you, and this is regarding the process that how you can join my YouTube community and what I offer through my YouTube community. So if you're looking for these the daily updates, the daily analysis, these the precise movements and these the precise predictions of the S&P 500 from Monday to Friday, each and everything on the daily basis, but also these the opportunities, minimum 5 to 10 opportunities, 5 to 10 opportunities every week. In order to join my YouTube community, you can use the links I have provided in the description of the video and also in the comment section. Or you can simply use this the join button, JOIN, that is there just below the title of this video. So when you click on this the join button, this JOIN join button, then this pop-up will open. In this pop-up, you will see that there are these the two options: daily S&P 500 updates and the updates and opportunities. So daily S&P 500 updates means that you will get each and every update from Monday through Friday, daily analysis, daily precise movements of the S&P 500. And this the updates and opportunities means that you will get the daily S&P 500 updates from Monday through Friday, as well as the opportunities, 5 to 10 opportunities every week. And if you notice that many people have joined my YouTube community for last many months, and it's going to be approx 1 year. So they have joined my YouTube community and they are getting the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as these the opportunities in the entire stock market. So guys, whenever you want to join my YouTube community, you are welcome. And guys, just one more thing, that once you have joined my YouTube community, then you need to visit my channel page, and on this my channel page you need to click on this the community tab. You will find each and everything, all of the updates here in this the community tab itself, all of the updates in the community tab. And if you are using the YouTube app on your mobile phone, then you will get the notifications and you can get these the updates on your mobile phone. So guys, once again, I have given the link in the description of the video and also in the comment section. Or you can simply use this the join button that is there just below the title of this video. Guys, now comes the very important part of this S&P 500 weekly technical analysis. And this is the most important part that can change the entire picture. Everything that is happening in the stock market, and it's not just about the US stock market. Although this S&P 500 weekly technical analysis is focused on the US stock market. But now in this section, we are going to talk about the Federal Reserve Chairman, his comments and the expected data. This means that this data and this whatever we are going to discuss is going to impact heavily the global stock market, Asian stock markets, European stock markets, Oceania stock markets. But the very heavy impact will be seen in the US stock market. Guys, now we are going to discuss the third point of the agenda, that is the Federal Reserve Chairman's testimony to the Senate and the House. So let's see what he has said, what he has mentioned, okay, and what we can expect from him. Okay, So, but before I talk about what the Federal Reserve Chairman has said or mentioned, okay, once again let me tell you technically what is happening in the inflation. This is the inflation chart, and the ticker is USIRYY. Okay, inflation. Last month the inflation, okay, the CPI data, it was 6.4. Okay, and it gave this the indication. So before that it was 6.5 to 6.4. So it gave an early indication that the stock market, the inflation want to hold. Now the question is that how the technicals are going to help us. Remember, this is the S&P 500 weekly technical analysis. Okay, and once again, I trust my technicals. I do the technical analysis. I do the data analysis. Okay, I do not look into what the manipulators are saying. And many a times I have helped my YouTube community members to avoid falling into the traps based on these the false or these the bogus stories. Okay, that are out there. Okay, on these the different platforms through these the manipulators, right? So we just look into the technicals. Whatever the technicals are saying, okay, that is what we trust. Just like this the yesterday's movement, because yesterday it came down. 1 hourly candle has confirmed that now there is nothing beyond 3937. So I've clearly told my YouTube community members that now feel free to go bearish, use any retrace as an opportunity, go bearish. There is nothing beyond 3937. Rather, we are going to see more bearish movement, and exactly it was 2% intraday fall. Okay, that resulted in the 1000% profits in the S&P SPY put options of this the weekly expiry, right? So now technicals on this the inflation. What the technicals are saying on this inflation? When we look into the technicals, okay, the most important technical that is actually that is not allowing the inflation to come down. Okay, this is the stochastic RSI. So what we are going to see in the stochastic RSI? 1, 2, 3, 4. Okay, 4 months continuously. For 4 months, stochastic RSI is trading at absolute bottom. Okay, I know that you are seeing that number 6.4. Okay, but technically absolute bottom or absolute top can come anytime. Okay, it depends on the movement of the technical indicator for 4 months. But in last 2 months, inflation is technically trading at the super saturated levels, means super saturated bottom. This means that a bullish reversal is necessary, or a bullish reversal is highly likely because of this this technical. And if you have subscribed to my YouTube channel for last many months, okay, or year, then you have seen the magic of the stochastic RSI again and again, that as soon as the stochastic RSI hits the zero or absolute zero, a reversal is confirmed. Okay, we have seen the same reversal in the Dow Jones, in the S&P 500, in the Nasdaq, in the entire stock market. So there was never ever a scene, even in the it was February, March 2020. Okay, when there was very heavy fall every day, like 6 to 7% fall. Then also the same stochastic RSI came into the picture and gave the intermediate reversal. So for example, there was 2 or 3 days, okay, extremely heavy fall. Then the next day there was extremely heavy bullish retrace. That extremely heavy bullish retrace was the result of the stochastic RSI. Okay, so we have seen the stochastic RSI again and again in action, and we can trust. Now for 4 months, and it is trading at this absolute bottom. Okay, but in last 2 months it is at the super saturated bottom. That was the reason in last month also I mentioned, just before the CPI data was published, I mentioned this thing, that do not expect that the inflation will come down. Either the inflation will hold or it will go bullish. This is what the technicals are saying, and this will happen. And exactly that thing has happened. Okay, now on Tuesday CPI data will be published, right? Technicals are not supporting any more fall, no fall. Okay, and even if the technicals even if the inflation failed to give any bullish movement, then also it will try to hold. Okay, means just like 0.20%, 0.50%. okay, just this movement, okay, this kind of movement, okay, around this the hold. and even if it try to come down, then also its fall or this the downward movement will be extremely low, like 1% at max, 1 to 2%. Okay, just like what we have seen last month also. Okay, nothing more than that, 1-2%, that's it. Okay, because the technicals are not supporting. Now guys, there is one more thing. Okay, this is what I mentioned, that if in this particular month, if the inflation fails to give any heavy bullish reversal, in that case next month it will be compelled to give 10 to 15% or 20% bullish reversal, extremely heavy bullish reversal, that will simply put the Federal Reserve in a situation where they will be forced, they will be compelled to increase the rates not by 50 bps but by 75 bps or 100 bps back to back, and that will result in an extremely heavy fall towards 3,300 or 3,000 itself. Okay, I'm talking about the S&P 500, right? So in this month we are expecting a good reversal, good bullish reversal in the inflation. If that doesn't come, then in the next month, okay, 15, 20%, 10%, 30% means anything that you might not think of, that will be there. This is what the technicals are saying. So guys, I hope that this picture is clear. Now let's talk about, okay, this the testimony of the Federal Reserve Chairman that was on Tuesday and Wednesday. So these things were clear, and now, okay, yeah. So this was my fourth update. I mentioned that higher interest rates and increased pace of rate hikes. This is exactly what the Fed chairman has said, okay, in his testimony to the Senate. Then came the next update that the Fed chairman has cleared his intention to go hawkish. Okay, and now the policymakers will ask him questions. However, as we now know his intention, thus the same will be applicable to the stock market, and now not much or heavy changes will be there. Means he has already cleared his intention that he is going hawkish, means hawkish. Okay, then the next update that the Federal Reserve is going hawkish. Now this is clear and this is confirmed. This means that now the manipulated bullish run that was there on Friday, okay, and initially on the Monday, okay, doesn't have any reasons to move up. So then I mentioned that as of now, technically, logically, and through the master of the market, I don't see. Master of the market means the Federal Reserve Chairman. See, you need to understand that the stock market fears nothing, and no one but the Fed chairman himself. Okay, he is the only person who can make significant impact on the entire stock market, and that is why the market movers, the market manipulators, okay, these people who are handling trillions of dollars, they fear him, the Fed chairman himself, right? So I mentioned that technically, logically, and through the master of the market, I don't see any bullish run, and that any bullish run now should be limited, and the stock market should realign itself to the bearish side. Now then, in my eighth update, okay, it was clear that it's been 4 hours and looks like the stock market has accepted the fact that the Fed chairman indeed is hawkish and is expected to remain hawkish, which is why the stock market is going back into its bearish trend. And on the same day, on Tuesday, one more thing has happened. That was the dollar index. Dollar index broke out bullish. Okay, earlier it was trying to, but because of the market manipulation, it failed. But now, okay, on Tuesday it broke out bullish, and now the the dollar index, it has aligned itself with the long-term bullish bond yield. Bullish dollar index, bullish bond yield means the bearish stock market. All of these three cannot be or can never move into the same direction. So now in my final update, okay, by the time, okay, I have written this, the final update, his testimony to the Senate, okay, it was over. So now, okay, these were my findings, that the MACD went back to bearish and formed a slip. Okay, MACD in case of the S&P 500, it formed a slip. What is a slip? Okay, this is what I'm going to discuss in the last point of the agenda. Okay, that is the probable movement of the S&P 500. What is a slip and how it impacts? But if you have subscribed to my YouTube channel for last many months, okay, then you very well know about this, the slip. Okay, so this slip was formed on Tuesday. On Tuesday itself, it has confirmed bearish movement. Then the moving averages on the 4-hourly chart as well as on the daily chart are back into bearish and formed a slip. Okay, two slips. Okay, MACD there was a slip in the MACD and as well as a slip in the moving averages, confirmed 100% bearish movement. Okay. Then the dollar index, okay, it was super bullish and broke the Chimoku cloud. Okay, this thing. So on Wednesday, the Fed chairman he testified to the House. Okay, and now his testimony to the House, he said everything as is, that okay, whatever he has mentioned to the Senate. Okay, there was no change. Okay, in his tone. Okay, and these things. However, the only change on Wednesday was that he said that they means the Federal Reserve Committee, okay, has not yet decided anything on the rate hikes, but it will be purely depend on the upcoming data and the recently published data. And he said it twice. What it means? This means that it can be seen as non-negative, but at the same time, this is not positive. It is non-negative and at the same time, this is not positive. And you will be surprised to see, because of that comment on Wednesday, there was a limited movement, non-negative and not positive. So my YouTube community members, now they knew in just 1 hour, they knew that it is non-negative, but at the same time, it is not positive. This means that the current bearish trend will continue. Any upward trend is limited or very limited. And on that particular day, Wednesday, the entire stock market, okay, it will go sideways just because of this one comment, this one development and nothing else. So now there was another factor, okay, on the same day when he was asked what it looks like in 5 to 10 years, then he said that no one knows what it's gonna be look like, because it looks like that a cycle has just begun. That was there 40 years ago. So there is a new cycle that is coming into the picture after 40 years. So because this is just the beginning of the cycle means the inflation part. Okay. Last time this heavy inflation was seen in 1977, 1980. Okay. So now the same cycle has just begun and it is too early to comment that what it will look like in 5 to 10 years. Okay. So it might take a while to see the peak of it. Might be like 1 year, okay, more than 1 year, maybe okay, around 2 years, okay. So indirectly he said that whatever we are seeing today is not going to get fixed anytime soon, but it's going to take some good time. This simply means the Great Recession is in the picture. That may last until 2025 or this is the 2026. Means a below period growth rate until 2025-2026. So someone has asked him when he is going to pause the rate hikes. Okay. And this was a question that someone has asked willingly to get some kind of positive answer from the Fed chairman so that the stock market can get a reason to go bullish. However, Fed chairman, okay, he was clear, okay, on this point, and he has said that he don't know and he cannot comment, because it's not that simple to answer in yes or no that when the Feds are going to pause the rate hikes. So indirectly he said no to pause in the rate hikes, means rate hikes will be there back to back at least for 2023 and possibly in early 2024 also. What it means? The recession or the Great Recession, right? So guys, once again, if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. And if you are looking for these, the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything, as well as these the opportunities, 5 to 10 opportunities every week, then you can join my YouTube community through the YouTube membership. I have given the link in the description of the video and also in the comment section. Now guys, let's move on to the fourth point of the agenda of this S&P 500 weekly technical analysis. And the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. Let's see what the technicals are saying on the daily chart. Now guys, we are here and this is the fourth point of the agenda of this S&P 500 weekly technical analysis. In this, the fourth point of the agenda of this weekly technical analysis, we are going to discuss the S&P 500 technical analysis on the daily chart. This is the daily chart. Let me write it down. Daily chart. D as in daily chart. Okay. Daily chart means that the one candle represents 1 day, not 1 hour or 1 week. One candle means 1 day. Candle will always get the topmost priority. Okay. This candle itself, it was a bearish hammer, confirmed a bearish movement, a reversal. Okay, in this the manipulated movement, and the confirmation of this the bearish movement, right? Now, when we look into this, the previous candle, this is the last candle. Okay, it's a heavy bearish candle, no defined shape, but it's a heavy bearish candle. What it indicates? This indicates that there is heavy bearishness in the entire stock market. What this means? This means that on Monday also we can expect the bearishness. However, on Monday we can expect that the S&P 500, that the movement of the S&P 500, okay, it will be limited to, we can expect the 3790, okay, because if it reaches 3790, okay, then it will fail these are two conditions. Number one, that it must spend 1, 2 or 3 days, okay, around this the zone 3840 to 3790. So this is the first condition, okay. Number two, that intraday the technicals on the smaller time frames, they will be saturated, okay. So on Monday there will be a limited fall, and there is the third reason that on Tuesday the much anticipated CPI data will be published. Okay, so these are multiple factors that will not allow a heavy fall on Tuesday. Okay, fall is expected, but a heavy fall is not expected. Anyways, okay, this is the candle there. Now let's talk about the technical indicators. First comes the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed below the lower band of the Bollinger Band as well as the median of the Bollinger Band, this means that the S&P 500 is bearish through the Bollinger Bands. Now comes the moving averages. Clear fan out, bearish fan out in the moving averages. Closing of the S&P 500 is below the moving averages, below the EMA. This means that the S&P 500 is clearly bearish through the moving averages, through the EMAs. Then comes the Ichimoku cloud. Finally, after what? After this was December. Historically, this was November. On the daily chart, after November 2022, this is the first time in March 2023 that we are seeing a breach of the Ichimoku cloud. Okay, so finally S&P 500 has closed below the Ichimoku cloud. It is bearish. Okay, now let's talk about some of the technical indicators. MACD, clearly there was a slip and a fall. Okay, MACD is less than the signal. Both MACD and the signal both are negative, means S&P 500 is clearly bearish through the MACD. Stochastic RSI K channel is less than the D channel. Clearly S&P 500 is clearly bearish. All other technicals are saying that it is bearish. Simple, bearish. Okay, what this means? This means that the S&P 500 is absolute. Absolute means 100% bearish. Absolute bearish. Okay, this does not mean, remember, being absolute bearish does not mean that you will see every day back-to-back red candles or very heavy red candles. No, this may or may not be. Okay, absolute bearish simply means that now because of the bearishness, even if there comes a reversal, that will act as an opportunity to go bearish. Means even if it try to move up, then also the bullish reversal will be limited. Rather, a fall will be heavy. We can expect limited bullish reversal, but unlimited bearish movement. That is what this says. So on the daily chart of the S&P 500, the technical indicators are now confirmed 100% bearish. So guys, once again, if you want to get the daily updates and the daily analysis of the S&P 500 from Monday through Friday, each and everything, then you can join my YouTube community. I have given the link in the description of the video and also in the comment section. Now guys, let's move on to the fifth and the last point of the agenda of this S&P 500 weekly technical analysis. And this the last point of the agenda is the probable movement of the S&P 500, okay, in the coming week. So guys, now we are going to discuss the fifth and the last point of the agenda of this S&P 500 weekly technical analysis. And the last point of the agenda is the probable movement of the S&P 500 for the week of March 13th, 2023. That is from March 13th, Monday to March 17th, Friday. So let's see what is going to happen in the S&P 500, what we are expecting or what we can expect from Monday through Friday. Okay. So a few things that you must know, okay, and that you must remember and that you must consider. Number one, S&P 500 and the Dow Jones are absolute bearish. Absolute bearish. Okay. Number two, On Tuesday, CPI data will be published. CPI means the inflation. Technically, in the third point of the agenda of this S&P 500 weekly technical analysis, I have shown you that technicals are supporting a good bullish reversal, a hold or a good bullish reversal. And the third point, that you must consider is the PPI data that will be published on Wednesday. PPI data, okay, producer price index data. So these three are important things here, right? Probable movement. Okay, one more thing that you must consider here. Okay, this is the Dow Jones. Okay, Dow Jones chart. So what I'm trying to show you on the Dow Jones chart is that the recent weekly candle has completely engulfed the previous candle. Okay, we have seen the engulfing, absolute bearish engulfing in case of the S&P 500 and also absolute bearish engulfing in case of the Dow Jones. Okay, this means that heavy bearishness in the entire stock market, right? Other than that, now the Dow Jones, in case of the Dow Jones, the MACD and the stochastic RSI both are aligned bearish, means technically because MACD and stochastic RSI both are aligned bearish, so bearish is the trend of the entire stock market. But there is one more very important thing here that we must consider in case of the weekly chart of the Dow Jones. It was last year, okay, it was November, when we have seen that the Dow Jones, it was able to move up. It was able to breach the Ichimoku cloud and it was able to move the bullish side of the Ichimoku cloud. That time itself, I have mentioned clearly, very clearly this thing, that 100% is a trap. That even though we are seeing that the Dow Jones on the weekly chart, okay, it is bullish, but at the same time, in case of the S&P 500 as well as in case of the Nasdaq, okay, it is bearish because it is still trading below the Ichimoku cloud. Until and unless all of these, the three indices, closes the bullish side of the Ichimoku cloud, we will not say, and there will not be any kind of confirmation that the stock market has regained its long-term bullish trend. Now what I was discussing here is that after many months, finally on the weekly chart, the Dow Jones has closed below the Ichimoku cloud. This is a significant change. It has closed below the Ichimoku cloud and it is bearish. Now the Dow Jones is bearish, S&P 500 is bearish, Nasdaq is bearish, all of the indices are bearish, means absolute bearishness in the entire stock market. Any bullish reversal will be limited, but there will be unlimited bearish movement. So once again, okay, let me repeat. So once again, let me tell you what I mentioned in the first and the second point of the agenda. That because of the heavy bearish engulfing candle on the weekly chart of the S&P 500, so heavy bearish engulfing candle, what it indicates? This simply indicates, technically it indicates that the next weekly candle that is going to form, it must be of the red color. Okay, it must be of the red color. Secondly, whatever movement there will be, this movement will be limited, particularly in the bullish side. Okay, so for example, you can see, so just for an example, okay, if you are seeing that there is a heavy bullish reversal on Monday, fine, but then you will notice that on Tuesday or Wednesday or Thursday or Friday, okay, anytime, any day, anytime, there will be a heavy fall. Because of that heavy fall, there will be again the formation of the red candle on the weekly chart, right? So whenever there comes this the engulfing simply doesn't allow any heavy reversal. So we are talking about the bearish engulfing. So this means that this doesn't allow any heavy bullish reversal. If there will be, I'm not denying the fact that there will not be any bullish reversal or there cannot be any bullish reversal. There can be, there may be, but that bullish reversal will be limited. Okay, that bullish reversal will not be heavy or extremely heavy. What it means? This means that for now we can expect that any bullish reversal will be limited to the zone of 3937. If it comes for some reason, it will be limited to the zone of 3937. What it means? If we measure the movement, okay, from this closing to the 3937, then it is approximately 2%. Fine, perfect, more than enough, more than enough. Okay, see, I'm giving it more than enough room. Okay, but in general, it must not be able to breach the 3,900 or 3,884. Okay, this is means 1% is fine, but more than 1%, no. Okay, but still I'm given, but still, okay, trusting my technicals, okay, and the concept of the testing and retesting. Okay, yes, there is a possibility that the S&P 500, whenever there comes a reversal, okay, it can come to retest the zone of 3937. Okay, because see, it came down, found very good support at the zone of 3937. Okay, manipulated movement. The reversal was supposed to be limited to here only, and then it was supposed to come down, but then a manipulated movement moved up, came down, found an intraday support, then came down, breached the zone of 3937, two consecutive closings below the 3937. This means that if there comes a bullish reversal, it will be limited to the zone of 3937. And this bullish reversal will give you an opportunity to go bearish. This bullish reversal or this level will act as a lower high for you. Okay, lower high. And what we do on the lower high? We sell. Just like my YouTube community members, okay, they did, okay, on this particular day, on Tuesday as well as on Thursday, okay, on this Friday. So they bought the put options here, back to back, back to back. So now this thing is clear. The bullish side is clear. Okay. Now, although I'm not expecting any kind of, manipulation or the manipulated movement. Okay. However, if the data, particularly CPI data, okay, CPI and the PPI, okay. However, we are not going to give much weight to the PPI data because CPI is what the Feds consider. Okay, this is the critical number. Okay, this is the critical this indicator. It says that if there comes the CPI data, if there comes any data in the inflation that says, okay, as of now, technicals on the inflation. Remember, technicals on the inflation. What was that? Technicals on the inflation. This the stochastic RSI. It is not allowing any heavy fall or any fall at all. Okay. So, but if for some reason, if there comes even a little weakness, okay, like 2%, 3% weakness in the CPI, and that says that it is holding, okay, then the market manipulators, they can try to then they can try to use this as an opportunity, okay, to manipulate the entire stock market. And then you will hear or you will read the news, okay, through the various these the news websites or these the news channels that the inflation is holding and it is not bullish. This means that the Feds can do this thing or that. Okay, so that will be just the made up story. Okay, nothing else. Okay. So if they comes into the picture and if they give a bullish reversal, then we have the 3937 zone. Okay. Beyond the 3937, now we have the 3991 at most. Okay. Now anything beyond 3991, it is out of the picture. The reason is that we have this Ichimoku cloud. The same Ichimoku cloud that earlier has acted, okay, as a good support for the S&P 500, it is now going to act as a good or the heavy or the very strong resistance for the S&P 500. Okay, 3980 or 3991 at most, even in the manipulated scenario. Okay, that is. So I'm talking about the manipulated scenario. In a normal scenario, 3937. Okay, normal or more than normal. Okay, you can say, right? Bullish movement done. Now let's talk about the bearish movement. Bearish side. Okay, on Monday, if the S&P when the S&P 500 comes down, okay, what will happen? We have this the cushion. Okay, very good cushion, very strong support. Okay, this is strong support. It comes from 3840 to 3790. Okay, 50 points. 3840 zone itself, it is a very heavy zone. Okay, as you know, if you have subscribed to my YouTube channel for last many months, okay, or a year. Okay, 3840 zone means 3830 to 3850. Okay, this is the zone plus minus 10. So now 50 points, okay, 50 points are there. This means that if the S&P 500 comes down, then also it is going to find some support. Technically, historically, S&P 500 has to hold for some time. When I say for some time, okay, what will be that time? Monday. That will be the Monday. Okay, because if there comes a better than expected CPI data, see, previous CPI data was how much? 6.4. This time the Wall Street is expecting how much? 6.1. If there comes anything above 6.4, stock market will give up heavily. If there comes like anything between 6.1 and 6.4, then also there is no reason that the stock market should move up. It can try to hold, that's it, nothing else. Okay. In an event, any data between 6.1 and 6.4, then on Tuesday also S&P 500 will be holding around or in the zone of 3840 or from 3840 to 3790, right? Then there will be the PPI data on Wednesday. Okay, so again PPI data will be taken into the account. If the PPI data further supports a hold, in that case we can expect a reversal either on Tuesday second half or on Wednesday. A reversal to 3884. Okay, as of now, at first it has to struggle around the 3884. This is the level, resistance level. Then there will be 3937 zone. Okay, that will be the final. Okay, this is the number. Okay. Now, because there is a bearish engulfing on the weekly chart of the Dow Jones as well as on the S&P 500, this means that S&P 500 and the Dow Jones on the weekly chart must form a red candle. When I say red candle, in what circumstances a red candle will be formed? By Friday, on 17th of March 2023, that will be Friday. On Friday, S&P 500 must close below 3861. Must close below 3861. Then only we will see a red candle. In terms of the Dow Jones, on Friday, on 17th of March 2023, the Dow Jones must close below 31,909. Then only a red candle will be formed. It will be seen. Okay. From Monday to Thursday or Monday to Friday, first half, it can move wherever it want to move. Okay. But on Friday, by the end of Friday, technically, it is under technical obligation to give the color, the red color. Okay. Now, so historically, like only 10% of the times we have seen that the technical obligation, okay, it was not fulfilled. Okay, but what happened in those cases also is that as of now, in case of the S&P 500, we are expecting that by Friday, okay, by 17th of March 2023, S&P 500 must close below 3861. Okay, but if there come exceptional things, some exceptional thing that, okay, 10% of the times we have seen, okay, in the historically, in that case there will be a closing, but that closing will be somewhere around 3861. So it might not be a red candle in color, but it will be a green candle. But this the green color candle, it will be small, it will be thin. Okay, or it will be like below normal. Okay, so that is what we have seen 10% of the times. Otherwise 90% of the time it is under technical obligation to give the color. Okay, fine. Also it is under technical obligation to hold, okay, or on or around the zone for 2 or 3 days. Already, okay, it has respected the zone on Friday. Okay, this is the recent Friday. One is done, 1 day, okay, it was there. If it further holds on Monday, then there will be 2 days. 2 days is sufficient. Okay, it will be, if it is able to hold, or if it respects, means if it doesn't come down heavily, then also, okay, its technical obligation is completed, means it has fulfilled its technical obligation. Now on Tuesday onwards, Wednesday onwards, okay, it can come down freely. Okay, not a problem. Now whenever it comes down, this time it is going to find, okay, first it will be breaching the zone of 3840 to 3790. Once it breaches the zone, then there comes the strong support. Then the strong support, okay, it is 3710. Historically we have seen, and also this is our calculated support level, heavy support level. Okay, then this will give a very good support, although we have a zone of 3735. So this is the zone of 3735. Okay, it can give some relief, okay, intraday, okay, some relief, but it will be the 3710. Okay, that is going to act as a good support or a heavy support. Okay, Then thereafter comes this the 3680. Okay, this again a good support. See guys, it all depends on the CPI data and the PPI data. Okay, more than the PPI, it depends on the CPI data. Okay, this is the selling. Okay, so if there comes heavy selling or very heavy selling, okay, then there comes the next support at 3630. 3630 is a zone. Historically and technically, it has given very good support, and this time also, okay, it can give this much support, right? Then we have 3600, 3580, 3580 and 3560. But remember one thing, as soon as it goes below 3680, or below 3710, then technically, okay, it will be saturated. Technically saturated means the stochastic RSI is expected to be saturated. Okay, see guys, next week it will be a little tricky. It is not that straightforward, okay, or it is not that simple. As of now, on the daily chart, stochastic RSI is coming down. It is bearish, but it is not absolute bearish, right? Monday, if there comes a normal movement, then also stochastic RSI, it will fall, but it will not hit zero. Okay. Now Tuesday, it will be the CPI data, and it depends that how much in terms of the percentage, okay, whether it is holding or whether it is going to come down or whether it is going to move up also. Okay. Then the PPI data. So it depends on the CPI and the PPI data, and based on, okay, this the analysis of the CPI and the PPI data. So if you are my YouTube community member, okay, then I will tell you exactly what we are expecting, what kind of movement we are expecting, okay, and then only, okay, we will be able to see that when exactly, whether it will be Wednesday or Thursday or Friday, what will be this the particular day when we will see this the stochastic RSI, okay, that it is hitting the absolute zero. Because whenever it hits the absolute zero, then a bullish reversal will be there. Technically a bullish reversal will be there in this the picture. Okay, so as of now I cannot comment because I do not know that how much it is going to fall in terms of the percentage, and based on, okay, this Monday, Tuesday, Wednesday and Thursday. Okay, so based on this the movement, the stochastic RSI values will be calculated, and accordingly, okay, we will see that when exactly stochastic RSI hits this the zero. But whenever it will hit zero, and if you are my YouTube community member, then definitely, okay, in my pre-market update or in my final update, one day before it hits the zero, I will tell you that this is happening. Now on Tuesday, it will be the CPI data. If you see that the CPI data is more than 6.4, expect a heavy fall. Okay. Then if you see CPI data is between the 6.1 and 6.4, then expect a hold or a little bullish reversal. Okay. Then comes the PPI data into the picture on Wednesday. If the PPI data is bad means if it supports the inflation, okay, bullish inflation, then on Wednesday it will come down. If it comes down, remember guys, if it holds or if it gives a bearish candle on Monday as well as a bearish candle or a hold on Tuesday, then I guess technically Wednesday, most likely Wednesday, the stochastic RSI, it will be saturated. If not on Wednesday, then on Thursday it will be saturated. Exact number I cannot calculate as of now, okay, because it depends on the movement. Okay, that is not there in the picture as of now, right? But remember that there will be a technical bullish reversal, and be ready for that. Because if you will be thinking that it is coming down, sell, and you'll be hearing this thing that sell heavily, it is going to come down, etc. But then you will see that immediately there is a bullish reversal and you'll be trapped, and that will be the bearish trap, a bear trap, right? So make sure that you avoid falling into that trap, right? And one more thing, that whenever you see a bullish reversal, then you know a bullish reversal at first will be limited to 3884, and then it will be limited to the zone of 3937. Anything beyond 3937 technically is not allowed. Okay, but if there comes a heavy manipulated movement based on the CPI data between 6.1 and 6.4, if the manipulators comes into the picture, if they give a heavy movement, then at most 3991, done, we are done. Even with the manipulation, 3991. Okay, last time I have mentioned this thing, that even with the manipulation, 4100, nothing beyond 4100. This time I am saying nothing beyond 3991, even with the manipulation. Okay, so we will see that whether there will be, okay, this is the manipulated movement or not. Okay, and how this is going to work, right? So as of now guys, you are aware of this. So as of now guys, remember one thing, The entire stock market is heavily bearish. Every bullish retrace to what? Retrace to my resistance levels is an opportunity to go bearish. Convert trap into opportunity. This was a bullish trap. I told you last week, this is a beautiful trap, a perfect trap that the market manipulators are building, and that they are going to sell heavily, and they are just trying to convince the retail traders that everything is fine and go bullish, but that is not true. So I clearly warned you last week that do not fall into their bullish trap. It is going to come down. And with this time, remember, okay, these things, the bullish side and this the bearish side. And once again, okay, on Tuesday at 8:30 a.m. Eastern Time, US, this the CPI data will be published. And then at 9 a.m. Eastern Time, US, okay, I will give you the pre-market update, means to my YouTube community members, and I will tell you what exactly we are expecting based on the number. This is the CPI number, okay, whether it is going to hold, whether there will be any reversal, or if there will be any fall, or if there will be a heavy fall. If there will be a heavy fall, then to what level? Exactly to what level? From where it is going to bounce back? From where exactly it is going to give an intraday reversal? Okay, so this thing, okay, I will give you in the pre-market update, and the same, okay, I will give you in this the PPI data through this the PPI data on Wednesday. So guys, if you also want to join my YouTube community to get these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as these the opportunities every week, 5 to 10 opportunities every week, then you can join my YouTube community. I have given the link in the description of the video and also in the comment section. Other than that, you can also use this the join button that is there in order to join my YouTube community through YouTube membership. So guys, if you have any questions that you want to ask, then please feel free to comment and I will answer to your questions. And other than that, guys, if you have liked this video, then hit like. And guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. So guys, this was my S&P 500 weekly technical analysis for the week of March 13th, 2023. That is from March 13th, Monday to March 17th, Friday.